hopefully, yeah. So hopefully, we'll get on some kind of road trip here into Central Florida, into Gainesville area. That's what I'm interested in, more into Gainesville. So hopefully, we can expand that relationship.
Perfect. One of the things that I talked to Steve Alfredo is we're always looking for, you've got the syndication stuff that we got going on, much bigger deals, but there's always opportunities to do a joint venture on something a little bit smaller if it's in the right place and it makes sense. Obviously 15, 20, 30 units, depending on how many partners you bring in and how much capital, you don't have to syndicate, right? That's not necessarily the case. And so, yeah, definitely looking for opportunities. We've had a chance to go look. We've been looking at a couple and nothing's hit. This is a tough place right now. I mean, I don't know. I actually was doing some research today because some of the things that I like to do is I like to go up and just put an episode on YouTube of just my analysis from some of the news that we got going on. And it's amazing. So there was an article, well, maybe I can share this. That may be the best way. This is all kind of Florida related. So here's one. I've got several that I highlighted. You should be seeing an article here from the Orlando Business Journal. And a lot of people like to bash on Orlando, right? Tourism, terrible. Well, it ain't so terrible. People are moving here like crazy. Look, so, they're basically top 3 in the country last year of people coming in to the metro. And it's got other cities on there that I got. Tampa's a great city too. Don't get me wrong. Atlanta's a great city, but the people keep moving. And so it just scroll down on this thing here. Here's kind of and of course, California leaving. So yeah, just California and New York always getting bashed on, but you got Phoenix, #1 with 82,000 new residents, Dallas, 76, Orlando, Tampa. It's got a couple of others, Austin, Atlanta, some of these markets that they shouldn't be surprises, right? They're just over and over again. And it's no surprise why people are looking here. And so this notion that, hey, nobody's looking in Orlando or this is not a good market is crazy. I got another one. This is Orlando Sentinel. This is a little bit older, January 21st, but so price has gone up 10% from 2019. And there's just not a lot of inventory and people are building. Development is off the chain here. And I don't know, there's whole swaths of areas that are being bought out by Lennar Homes, by other developers, and they're trying to build, single family properties. Well, there's just not that many homes for $300,000 or below. And so what that means is you get these people that just can't afford to buy and they rent. I mean, it's just the bottom line. It doesn't mean you have to, we provide a bad product, but $300,000 is significant. And then you get into some of these periods of time where maybe people fell a little bit behind on their payments. And now their credit is, their credit checks aren't going to come out clean like they would have, and they have to rent. And so I have one more that I want to share. And this is not to bash on Tampa because I do a lot of investment in Tampa, and I know we got some folks here in Miami. But what I'm trying to show is that there is a lot of activity here, and it's not as bad as some people say it is. And I'm not pitching any deals here in Orlando. I don't have any deals right now. I just can't find any. It's just that simple. But what's that?
Let me ask you a question, right? So what was the great fear during the pandemic last year about Orlando? People were not willing to invest in Orlando. I was looking at a deal in Orlando and investors were just not willing to invest in Orlando.
So the biggest fear was that there is a large swath of so you talk about the different job sectors, there's a swath of jobs related to tourism. You got the parks. And so that's all the way in Southwest Orlando. So when people think about the parks, they think that's Central Orlando. Well, no, it's not. It's all the way, it's almost outside of Orlando. And so those people that work in the parks, and you're talking Osceola County and some of the counties around there was a depression. There was issues with people being able to, they were getting laid off and they were having trouble, paying their bills. And so there's been money injected into the system from the government multiple times. We're looking at another injection, and now things are starting to creep back up. So I think that was the biggest issue, is that there was so many unknowns with COVID and employment that people got nervous. But what they kind of didn't see is like, or, you know, the whole of Orlando, right? The whole of Orlando. You got whole areas east and northeast in Orlando. Nobody's working at these parks. And I mentioned this before. These are high-tech people. They're, you know, where I live. So we live right outside of UCF, just east of UCF, which is all the way on the northeast here. I'm about 40 minutes away from the Space Coast, from Titusville, from Melbourne. You got SpaceX. You got a ton of jobs over there. Then you have Lake Nona, which is like by the airport on the east side of town. That place is booming. And so it just, that's why being on the ground is important. But I think that was the biggest issue. And so that tees me up perfectly to my last article that I was looking at.
So what is the percentage? Because I mean, I've heard the same thing about Orlando. What is percentage of tourism, you know, in Orlando? Because I mean, I never thought Orlando was like Vegas, where you have so much on tourism. But how much percentage is tourism compared to other industries in Orlando?
I think it's about, if I don't quote me, and I know I've talked about this before, I think it may be anywhere from 15 to 18% that were involved on some level there. So it wasn't an insignificant amount, but what people don't recall is, or at least forget, is that when we went into COVID, we already had a supply deficit in housing. So it wasn't like we, you know, like there were a bunch of places available and, you know, that there was, you know, no, it's already a deficit. And when you talk about residential real estate, people have to live somewhere. And so they may not do a lot of things, but the one thing they will try to do, most tenants, I mean, the majority of tenants are not bad people. They're trying to make a living like everyone else. The majority, they want to pay their rents. They have family. They want to have a roof over their heads. And the government stimulated it, you know, stimulated the economy by providing them funds. We had people in some of our assets that were paying months in advance because they're like, okay, we don't want to be messing around with this, so I'm just going to pay 3 months of rent. You know, here's the money. And I'm not saying that everyone did that, but you have this feeling that, you know, people are certainly, if you're renting, if you have a lot of 1-1s, that's dangerous to begin with, because those generally are the first ones that people depart. If you have a bunch of, you know, 1 bedroom, 1 bath, those people can kind of shut down and go live with, you know, go crash with someone. But if you've got a family, you know, 2 bedrooms, you got 1 bath, whatever, it's a lot harder to just up and move and go live with someone else. I mean, you're going to do so much of that before it's uncomfortable. And then you had all these people that were basically working from home. So there's just a lot of issues. But to go to the pandemic, here's this is February 4th. So this is national. So you still got to kind of look at your local markets are critical in real estate. But, you know, so we're talking here that average rents are almost at their all-time highs for last year, pre-COVID, a year later. So there was a blip. In a lot of places, there were a blip. There were about 3 months or so where, you know, kind of March, April, maybe not March, April, May, and June, where there was a lot of people that are like really scared to do anything. And other people were like, yes, this is when it's time to make a move, because the less people are competing. And if you have a job and it didn't impact you the way that it impacted other people in the economy, then you were able to potentially make some moves. But all these people that were trying to buy houses, they just pumped up the price. And so, but yeah, it's, you know, so it talks about, here's where Tampa comes in. Here they talk about Jacksonville. These are places that have seen rent increases, you know, for the last year, 4 to 5%. We're investing in a place, I won't go into too much detail, same things, 4% year-over-year increase in rents. So you got to look at it, and you got to take the national report, and you got to kind of take a look at the local markets. But it's not a story across the board. But what we are seeing nationally is a trend of rents bumping right back over the top. Why is that? Because there's not enough places for people to live. This is the bottom line. So I'll stop there. What's that?
I dropped a link in the chat box. It's from a wealthmanagement.com site that I visit.
Okay.
It's the top 25 markets that are mostly adding most multifamily units in 2021, and Tampa, Jacksonville, Orlando are all on that list. So,
yeah.
And about, well, you know, all common markets. So it's a good article to check out.
Yeah, absolutely. I will. I see that. I'm going to save it. Hopefully other people are saving the chats, but I talk about it all the time. You want to invest where it makes sense to do so. And that's kind of the motto of my company, because it may not be where you live. In my case, I'd love to invest in Orlando, but the deals aren't there right now because they're sellers. It's a seller's market and the deals it's expensive. And so we keep looking, we haven't found it, but doesn't mean we can't look, right? And if you get the right off market deal, it is a good market where you can expect some general upward trend in rents. You certainly have the population that keeps coming down here. So there's a lot of reasons to do so, but I think that's why there's so much competition. You're absolutely right.
U-Haul, did you guys see that U-Haul released their numbers for 2020 for one-way moves? Florida had 5 of the top 25.
Mhm.
Number 1 was Northport, over by a little north of Cape Coral. Number 2, Kissimmee, just south of Orlando.
Yep.
Then number 3, Port St. Lucie. So it's pretty
Yeah,
great.
absolutely. Great markets. And Kissimmee is about as close as you can come to the parks. It's like really just,
Yeah.
Right there.
South Orlando for those that aren't there. And you have the parks within, maybe 10, 15 minutes from there in car, and they still seeing a lot of people move in. So it's just, sometimes you got to kind of look through what people are saying and really dig at the statistics. And these are the kind of things that, obviously, if you have a paid service, that's great, but you can also look at trends for free and kind of see these things. And there aren't many things will stop population trends over time unless you got something crazy that's going to be persistent. People are going to continue to move to areas where it makes sense to do so. And so Florida and those markets are great. I know I'd love to find another Port St. Lucie deal. Keep me posted, Brendan. I know that, we've had a chance to look at some stuff. We were looking on a property in Dayland is it Dayland? I always say Dayland, but it could be DeLand. DeLand that didn't work, but we're constantly looking for deals. So, and when we find them, obviously we'll pitch that to folks that maybe aren't interested in being active, but they want to passively invest. And this is why some people will get a little bit, they ask about why syndications have an acquisition fee. Well, the reason it is because there's a lot of properties that we go through and a lot of money that is used to find these deals. And so when you get one, it's kind of like, okay, well, now I get to recover some of my lost, some of my expenses. It's the same thing with real estate agents. They got their 3%, but for every one of those commissions, there's a lot of work that goes towards it, and a lot of times where they don't get paid anything. So I think that's part of it. But I always tell people when they see their returns as a limited partner, it's irrelevant. It's beyond any acquisition fee. So they can look at the acquisition fee, or they can focus on their returns, and that's the important.